What's up, currency traders? So good morning. Welcome to Forex.Today. Let me remind you that trading Forex is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hi, my name is Wayne. Nice to meet you. You know what? I want to put you here. That's all right for you, right? Is that good for you? Works for me. It's good for you. Good for me. Hey, my name is Wayne. I'm a currency trader. Been trading currencies a long time. I love it, love it, love it. Traded all day, every day, day and night, morning and evening, afternoon, on my phone, on my laptop, on this computer, on that computer. It's like ever present and always on. But it's a really cool gig, man. I really do love it. It's intellectually stimulating, and if you get it right, it pays you too much money. So I'm like, okay. So anyways, I've been doing this a long time now, a couple of decades almost. Not quite a couple of decades, certainly 15 years or so. Anyway, so please get involved and ask questions, because I'm here to share my experiences with you. The things I learned from the bad, the things I kept with the good, and then some of the stuff I bring to the table before Forex. I was a successful entrepreneur, and then I was a venture capitalist. So I got some background there as far as like managing funds and raising money and all that kind of stuff. Done it, did it. My rhymes are tight. So anyways, get involved, ask questions. If I can share what's here with you, I'm hoping it will benefit your success and thus your family. So this is your opportunity to get what you need, so to speak. So today I will cover dollar pairs and yen pairs and Swissy pairs, or whatever we can, some gold, some oil. All in the idea of explaining like where in the world are we. So like what does it mean when two people on the Bank of England's committee decide to vote for a rate cut? And why is that a big deal? We can talk about that. So I'm the Chief FX Market Strategist for Traders Way. So I suggest you go to tradersway.com, open up a trading account, start with the demo, check it out, see if you like it. The website's pretty, the back office is nice, the spreads are narrow, the execution speed is fast. The swaps are amazing. So they really have everything that you need over there, including world-class customer service. And then, you know, the support of me every single day here at Forex.Today. They make that possible. So pay that kindness back. Of course, they're not necessarily doing it to be kind. Why would a broker want you to be a successful currency trader? Because you'll place trades for years and 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 years, and they get paid when you trade. So if you're a good trader and a successful trader and a confident trader, it's not that you'll trade a lot, you'll just trade for a long time. And that sounds like a great customer to have. One that's happy and successful and confident, and yeah, long term, baby. Long term. If you like these videos, make sure you like, subscribe, and comment. It's helpful to the community to let YouTube know that you care. That's all it says. Hey, it just says that you care. Lulo says, Wayne, can we please have a Black Friday sale on all courses and training at Fx Bootcamp? Okay. When is Black Friday? I have no idea. But yeah, sure. Let me know when that is, and we'll see what I can do. So right now I'm only sleeping 4 hours a day. I don't plan on going to bed before midnight again tonight. I don't have 5 minutes of free time today. All the way to midnight, like seriously. So maybe after tomorrow webinar I can look into it, right? Andrew, Andrew says he's starting his MBA this month and will have access to Bloomberg Terminal with us up at Forex Trading. Sure, yeah, it's a skill. So learn Bloomberg and you can put it on your resume. Okay, so let's just move on.com, guys. Looks like the questions are coming in hot and fast already. Friday after Thanksgiving is Black Friday. Oh, please put the mic. Thank you. Sorry. Okay. Why don't we do like the week of Thanksgiving or something, so that since we're not trading Thanksgiving, you can spend that time doing courses. How about that? That's probably better, right? Yes, Ronnie, we do have swing trading today. That is on my mind. Wayne, let's check ZAR pairs. All right, well, here's one. Okay. And what? Would Wayne check the ZAR pairs? I got my second entries on USD ZAR, Euro ZAR. Nice. Okay. You mean, okay, you sold the pullback. Nice. Let's get off the 4 hour. Let's go to the 1 hour. So you did the down, 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 up, up. All right, cool. It's a little aggressive, but it is what it is, right? Basically, you're selling off 1650. Okay, that's cool. Yep, gapped and everything. So, yeah, it's a hard one to catch, right? Yes, Frederick. Yes, we'll look at pound dollar too, especially with the news that came out on the vote. Okay, yeah. So down, 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 up, up, sell kind of thing. Yeah, you can see how like typically I have like a 21 EMA there, right? So let's add that and see if that's helpful. No, it's too many lines. Don't add a moving average. I'll never be able to understand what's going on. It's too many lines. Sorry, dude. I haven't slept much. All right. So maybe that's all it is, huh? So you sold the 4 hour 21 on an out of position trade. Yeah, that's pretty reasonable. Oh, whoa, what happened? I can't read the charts now. What's going on? Where am I? Now I'm lost. What did he just do with his voodoo magic? So, yeah, I'm adding yesterday's coffee to today's coffee. Oh, my God. Holy smokes. All right. So anyways, yeah, so kicking off a 4 hour 21. Yeah, I don't like to do that, but of course it's the only thing you really have to do if you're going to try to do it. So, yeah. Okay. Yeah, you got to give more thumbs up because the spam bots are getting good. Getting, what, 7 or 8 thumbs down now? It used to be 1 or 2. Now it's 7 or 8. Fundamentally, going long ZAR does not outweigh the benefit of the swap. Yeah, that's why you do it. See, you know, return is a function of risk generally, right? What that means is if you find it risky, it's not that you don't do it. You just need to get compensated for the risk. So you're like, oh, that's risky. The guy's like, well, I'll pay you more money. And you're like, oh, okay, that sounds good. Danielle, I've covered that to death over the last 2 weeks, so you just have to watch the other videos. I've just gone through it so much. I can't go through it again. I'm sorry. I'm not in a mental place right now. So I just can't do it again. Let's just stick to the charts today. But anyways, how do you catch a gap? And that's how you do it. Right? It's just an out of position trade. Notice the trade that I took. Oh, no. The trade I took at the time was the confluence of M3s. So you can see like that was the trade, right? So once you miss that trade, what do you do next? Well, I'd say most of the time you see a scenario like this, and then like this. But it opened out of position and moved really fast. So the only thing you have to do, the only opportunity you have in that situation where it doesn't pull back is the 4-hour 21. And that's in the training course. Yeah, Andrew, what happens is just bankers receive flow from their customers over the weekend. So I think what was happening here, and I alluded to it earlier this week, is that, people were moving to lira, and now they're probably moving back to rand. But yeah, that's all it is on a Saturday, big players are calling the bank and they're like, I need, $10 billion, 10 billion euros worth of ZAR. Okay. Rand. So that's all it is. So when the market opens, it pops. It's not very common, but it's more common in exotics because there's just less liquidity. Right? So like, what percentage of global trade does South Africa represent? What percentage, right? And it'd probably be a small percentage. What percentage of global trade does the United States represent? And I think it's 27%. Right? Yeah, and I've actually said that, Danielle. Yeah, we've gone through all of that. And then you should look at the January and see that the last time I looked, it was 50-50. So one of the thoughts that I had explained is maybe dollar weak all the way through the 12th of December. And then we stop selling dollar and we start buying dollar, into the idea that there might be a rate cut one more time in January. So I think I said something like short the dollar for 6 weeks and then buy the dollar for 6 weeks, something like that. Okay. But again, all these variables change in real time, and you should never do something because, whoa, Wayne told me so. I didn't tell you jack, except you need to watch these indicators and make decisions, right? So, yeah. Fembuick says only 27%. I guess it depends on the measure. There's multiple ways of saying that. So, and I'm just going from memory. Who knows what I read? Okay. I think I was reading that. So at Harvard, I read probably 5 or 6 case studies a week. So I'm studying companies from like Uber and Airbnb, but right now I'm doing global strategy, and so we cover more currently. We did something, we did many, but one of the ones I'm thinking about is IKEA, and it talked about how much money IKEA makes, where it makes its money, what percentage of that revenue these other international companies represent to IKEA, and overall, what percentage of the market does that economy represent globally, right? So like, I think it was only something like 12% of IKEA revenue comes from the United States, but it represents 27% of the entire world. So you're like, IKEA is making a lot of money, but they're supposed to be making more money in the United States, right? Something like that, because it represents a bigger global player. So why are they only making 12% of their money? They should make 27% of their money in the United States, just to stay on par with the kind of money they make in Germany, for example, right? That kind of thing. So I get all these little pieces, right? And there's so many pieces. I'm reading all this different data. I'm just constantly reading. So I'm not sure where I got the 27%, but sometimes, is that a percentage? Is that a total? Is it a total of what? When was it measured? How old was the data? So, I don't know. But let's just say, Famobix, United States represents a bigger share of global foreign currency than South Africa. That's all I'm saying, right? South Africa is probably less than 1%. The United States is, let's say 1/3 of the entire world. Okay. Anyways. Yeah. Yep. You know what I mean? But fabulously interesting reading on a regular basis. On a regular basis, yeah. All right. All right, so let's just move on .com. Everything's good in the hood. Let's look at where we sit. Oops. Yeah. So what was it, about a week ago, maybe 10 days ago, this was about $2,000. Now my portfolio is $3,000. So my profits have gone up 50% in about a week. I've made about 1,000 pips in a week, and I haven't done jack on this account. Haven't done jack. My money made me money. I can make 1,000 pips in a week sleeping. Or the other way around, I can make 1,000 pips a week not sleeping, right? But this trading account, those are just those, what was it, like 6 trades or something? Just crushing it, making money, doing nothing. Money for nothing in my cheeks for free. Yeah, my rhymes are tight, you wish you could, right? So that's what it's about. I'm trying to teach you guys. I'm trying to teach you guys the value of building wealth. And stop, picking up pennies all day, right? You're going to get a bad back. So that's just another example. All right. Let's go here. So yesterday we talked about oil. And I guess we got to look at it because I believe it's OOP. OOP. I believe it's OOP. OOP, boopy doop. Okay. Oil futures were up 1% last time. Let me know if you're back. Should be back now. I should be... Oh, good. I'm back. Yeah, this is really frustrating. So I had Comcast out here yesterday. They gave me new equipment, better equipment, more sophisticated equipment. And already, right in the middle of our webinar, dropped for 1 second. So it's not that I'm ignoring all of this or I'm not doing something. I've spent enough time on it where, I want to put my fist through a wall with Comcast in between. But anyways. Right? Yeah, I suppose, Ron, but they brought out like the pro stuff. But I forgot to tell you, though. I think I told you a couple of weeks ago, I ordered an increase in my my speed from 60 megabits to a second to 150. And they didn't show up for the appointment to install. I chose the speed, I chose the equipment, and then I made an appointment. I got a confirmation page. Nobody showed up, so I contacted customer service, and they're like, we don't have any record of this order. I'm like, what? I remember doing it. So I did it again. In my account, it says, you want to increase your speed? I'm like, hell yeah, boom. And then it's like, how fast do you want to go? I'm like, I want to go 150, right? I want to go fast. So then they're like, do you want your own equipment or use ours? I'm like, oh, okay, I'll use yours. And then it's like, choose when you'd like to deliver. So you choose about a week out in advance, and you choose the date, you choose the time, you hit submit, you have to accept the terms of service, you accept that, you get a confirmation page, congratulations, here's your date, someone's going to come out. Contact support again. I'm like, do you see my appointment? They're like, there's no appointment. This company has been rated like every year for something like 10 years, the worst customer service in America, maybe the world. It's just amazing. Amazing. Just amazing. So anyways, I contacted their institutional department. And so I got something cool to show you maybe this time next week. I ain't going 150, baby. Anyways. All right. Where were we at? We were talking about oil. Oh, someone asked about alarms. And where I set some and they're not here. So anyways, let's do this. Trading alert. And then we'll do here, trading alert. Okay. And so I got 2 alerts. We'll see if they get triggered. I believe I'm set up here. Yeah. Okay. So we'll see if I get an alarm. Pound getting killed. Yeah, well, you know, you were there, right, when it happened, right? The Bank of England results announcement. So I imagine like there's no reason to even cover it because you've already done everything, right? So pound yen. So it's funny, you guys trade on such small time frames. Sometimes I hear panic. Like the pound is getting killed. All right. Yeah, all right. Cool. But it's moved, you know, a day's worth of pips. That's not killed. It's 100 pips, sure. But you know, in the scope of things, like the pound's getting killed, and I look at this. Let's go out to a 1 hour chart. I look at this, I'm like, the pound's not getting killed. What are you talking about? Okay. All right. So let's put some logic to this. Does this make you want to be a bear? Oh, and I think maybe I just got an alert. I don't know. My phone is just on fire. So many people are pinging me. So it's pretty funny. I'm in group projects. So there's a lot of bankers in my project group. You know, it's all finance, right? So anyways, one is a banker, and he's like, hey, sorry guys, I got to go. I got to jump on a plane. I'll be in London in a few hours. I'll ping you when I get there, and we can keep working. Like someone just said, Jimmy, get to London now. Oh, yay! Boom, off to London. And the other one is like, we're working on a project, and all of a sudden, I have to go to New York. And they're in Boston. So all of a sudden, boom, another banker, right? Just like, go to New York now. Okay. So they have to drop their Harvard stuff and go do work stuff, right? And just like, get to New York now. Get to London now. And so I'm up at like nearly midnight last night. We submit our work, and I'm chatting with the one other person that's still alive. Everyone else is asleep or dead or something. And I said, "You're in finance, right?" And she said, "Yeah, I'm a banker." I'm like, "Oh, where do you work?" She's like, "I'm at Goldman." I'm like, "Hey, well, awesome work today. I'm glad we were the ones to survive to the end and submit it and watch the watch the sunset." She's like, "It's amazing because at work they crank out the math all day long." And she's like, "This Harvard stuff just takes up so much time. It's so crazy." So it's just funny. Oh, these bankers. Yeah, those silly bankers. But it's kind of cool, though. It's kind of cool, like busting out, 21 pages of calculations, with all these bankers. And I'm just a currency trader. All right. So anyways, pound, yen, yada, yada, yada. Cool. Okay. If you were a bear on a longer term, do you see the setup? Okay. Well, that's a complicated process, which has been on hold a little bit, but I'm working with the right people on it. Let's just put it that way. Okay. All right. So that's that. So if you get this together, you should be able to see this is going to fall quite a ways if you are a bear. Okay. So let's draw this. Now, if you're a bull, you see it differently. You see it this way. And why is that? Okay? Well, yeah, Danielle. So I met with a central bank, I guess it was 2 years ago, to set it all up. The problem is, depending on where you domicile it, so I've looked at two now. One, I need $20 million in cash as bank capital. That doesn't pay for like legal stuff and setting the actual bank up, like the charter and stuff. And it doesn't, I mean, that's nothing. The 20 million is basically the net bank capital requirement. So you have to start the bank and get the software and do all the infrastructure and the office and this, that, and all the things you need. And then on top of that, you need $20 million in cash in your vault, because when you run a bank, you have your liability side of the asset sheet, of the balance sheet, right? You have the asset side, which would be, vault cash parked at the central bank, any loans you've made out, any bonds that you've purchased. And then there'll be a discrepancy. Hopefully, you'll have more assets than you have on-demand liabilities. So, for example, if someone lent you, or not lent you, sorry. When a client deposits $1 million, you put 10% in the vault at the central bank. So now you have 10, what did I say, million? So I have 100,000 parked at the central bank, but that's an asset, right? So now I got this other 900,000, and I can do stuff with it. I might want to keep some on hand in case you come back and you're like, I need $20. Oh, okay. So I got to keep some in the vault, right? So that's another asset. But once I get to a certain level as a bank manager now, I'm going to want to say, you know what, I got to deploy some of these assets, right? I could say I can loan it to another business for 5 or 10 years, but that there's some maturity risk there. The amount of time impacts the duration risk, right? I can lend it out to a 30-year mortgage, but that's even longer dated risk, right? But therefore I'll have a higher yield, or not just yield, but return, right? Or I can just simply buy treasuries, right? Like I buy US treasuries and I don't face that much risk, right? And if my client comes in and says, give me all my money back, well, my treasuries have a pretty good liquidity, right? They're basically 100% liquid. I could always dump it today and cover my cost, cover the going to cash. But I would say, most clients don't come in and say, give me all my money now. So I could then buy some treasuries. So I got some at the vault, some in the central bank. Let's say I buy some shorter term, 3 month, 6 month, 1 year treasuries from the United States, build a ladder of all that, collecting different types of yield, which would average out to probably 2.2% yield once I create this ladder. But I might only deploy 30% that way. So now I take, whatever the other 70% of the 900 might be allocated to, I don't know if depending on the jurisdiction, I might be able to buy corporate bonds or do something else, right? So I have this big portfolio. Hopefully the portfolio is earning money. You see what I mean? Because now I'm collecting, right? I'm collecting a return on all this. That other stuff is now considered what's called bank capital, and that's an asset. Because, it goes on the liability side. But anyways, so you got all these assets earning money, and therefore your asset base is growing, right? Then you got your fixed liabilities, essentially. If someone gave you $1 million, you owe them $1 million, but your $1 million is now 1.1 million, right? And so now the rest is bank capital. Well, just to start the bank, just to be a bank, you need the 20 million in cash to start, in case you face liability risk early on in the business, right? Now, if I were to be domiciled somewhere like Switzerland, I believe the number is 200, not 20. Okay, so, you basically, to do all this, you're going to need a B. Let it be, right? If I'm going to be in Europe, I'll need a B. If I'm going to be somewhere else, I'm going to need, the bare minimum just to start the bank, 100M. But anyways, don't worry, guys. Nothing to do with Forex. But it's all about money, making money, making money, making money. All right? So anyways, you got to find what you want, guys. Bulls are okay with the dip, but they got a plan A, right? There's the plan A. There's the plan B. Bears are thinking down, up, down. So it just depends, right? Just depends on who you are. I like variable spread, Stevens. I love variable spread. Oh, it's really old school. It's just how I've always traded. But here's the logic. With a VAR spread, so you open up a VAR account, that means almost always you get a lower spread than a fixed spread. Now, if you're trading at times when volatility is high, which by definition, I would argue, you shouldn't be trading when volatility is high. Okay? You understand? But if that's what you do, you trade the news and stuff like that, then you might want to consider fixed, because even though all your trades are going to be, let's say, I don't know, a half a pip more expensive than a VAR account, you at least know it's a fixed risk. If you know your euro dollar's 3 pips no matter what, then you can account for that during your news periods when other accounts could be much more than that, right? Now, I honestly think this is another risk that's a lot less common and not as necessary as before. So ultimately, it doesn't really matter. I'll give you an example why. Back when I first started trading, the spread on the, what should we pick? Pound dollar was something like 7 pips. And the pound yen was 12 pips. Okay? However, After non-farm payrolls would jump 400 pips in 2 minutes, 3 minutes, 4 minutes. It would be up 400 pips, and then it'd come flying back down another 250 in the next 2 minutes. So let's say a total swing, let's say in 15 minutes, might be 1,000 pips if you count the up and the down and the up, right? How long is the string? 1,000 pips in 15 minutes. What happens now? It moves 30 pips and stops, right? Like, and people are like, oh, NFP is crazy. I'm like, tsk. Right? NFP is a kitten. It's a baby kitten, right? So anyways, spreads have gone from, like, so in that time when NFP would move pound yen 1,000 pips in 15 minutes, and not straight up, I mean up and down and up and down and up and down, all over the place volatility, well, the spread could jump from 12 to 30. Your spread. So it used to come out like your stop would be 30 pips away and you're short, and all of a sudden, boom, the market drops, and you're like, yeah, I made all this money. And then you're like, whoa, 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 whoa. Why am I not in my trade? You're like, oh my God, I'm supposed to be up 300 pips, but where's my trade? And then you're like, my damn broker hunted me, right? You used to hear this all the time. You're like, no, dude, no. The spread popped 30 pips, and your stop was 25 pips away. Just the spread knocked you out. Okay? You see what I mean? Oh, that was my alarm. Did you guys just hear it? Someone asked if the alarm works. I just heard it. The alarm went off. Right? You can hear it, right? Crude, crude, crude. Crude, crude. So, let's see. Now, I believe I'm supposed to get an email, but I might have turned that off and put in a fake email address just because I don't want so much, but we'll see. No, I don't think I got an email yet, but we'll see. Just getting tons and tons and tons of work. But anyways, so that's that. We don't face that. First of all, you don't face, like, if you normally paid 12 pips for a pound yen trade and you could pick it up for 8 pips all day long if you went with a variable spread, but you knew to stay away from high event risks because that could go up to 20. Yeah, but it doesn't do that anymore. The market's way too liquid. You understand? So you're like, does it really matter if you go from fixed to VAR? I mean, yeah, a bit, but we don't face these things as much as we used to do, right? These used to be like ridiculous risks. Okay? So why were these spreads, right? Cash says something about manipulate the spread. No. This is the interbanking system. So imagine the spread widening when there's just no liquidity. So think about this. If you're a buyer or a seller, but there's hardly anyone trading. Now, why would they not be trading? Well, non-farm payrolls is about to come out in 2 minutes. And everyone's like, I ain't trading this. This is about to pop 400 pips, but I don't know which way. So smart money would say, I ain't going to trade that. So nobody's trading. But then a newer amateur trader comes in like, hey, I can make $10,000 in only 2 minutes trading Forex. Woo! So I'm going to take 50% of my account and I'm going to drop it right 2 minutes in front of non-farm payrolls. Well, now to execute that trade, there's no buyers and sellers, but the trade is in the market. So now the broker, it's not even the broker, it's just the interbanking system, right? Now you got to reach up 30 or 40 pips away from current price to get someone to play with you. It's either 30 or 40 pips up or 30 or 40 pips down. But you're like, if you're trying to sell, people are like, no, not interested, not interested, not interested. So you got to go farther, right? Because there's no buyers and there's no sellers. So it's not it's not like the broker comes in and goes, let's jack up the spread to 30 and we'll make money. All this is basically automated, right? So when we face those risks, it's usually because the trader is the dumbest trader on the planet and doesn't know it. Because everyone's looking around like, look at this idiot, dude. He just put some money in the market and none of our payrolls is coming out. And he's gambling this money like, oh my God, look at him. Right? That's what it was. But we don't really face that kind of craziness. The market is so liquid now that there's always someone stupid enough. Right? I used to have a boss that said, Wayne, no matter how ugly you are, you'll always find a woman desperate enough to marry you. So no matter how ugly your trade is, how stupid your trade is, how ridiculously inappropriate your trade is, there's always going to be someone that will take the other side. So what that means is, it's been so long, but maybe it's just my style of trading, but I don't even remember the last time I got stopped out on spread, but it used to be common. Okay? Okay? Create an online empire. I think what you mean is like when you go from a retail Forex broker to like an institutional broker. But I know people, I actually advise them to take their money out. So I have to think about when this was. I think it was when FXCM went out of business in the United States. And someone I know had something like, I can't even remember. It was either 20 million or 200 million. I can't remember. But in their FXCM account. It was a London account, but FXCM US went out of business. And I'm like, yo, dude, an American company they're on Water Street, I think. I've been to the FXCM offices several times. I'm like, dude, they just folded. It's an American company and they just folded the US operations because the cost of compliance is so high. They're getting crushed here. They might be in serious trouble, right? You probably should remove your money. And they're like, yeah, no. I'm like, all right. But, so how much is too much? I don't know. I think it must have been 20 million, but it might have been 200. The other account I remember was, I think it was more than 200M, but that was in an account in the Middle East. And that was the guy that was losing. Yeah, he had like 2B, I think. And he was losing like $20 million a week. And he did the classic moves just like everyone here, right? That is struggling. He would buy at the high and he'd sell at the low. He was losing $20 million a week. The reason it must have been $2 billion was that I remember talking to him about it. I'm like, this trading is just horrible. And he's like, yeah, well, it's only 20M, right? So if it was a $200 million account, that would have been 10% of his account. Like, dude, like everyone would freak out about that. But I think it was more like 2% here, 2% there, 1% here. 1% just happened to be 20 million. And he's like, it's not a big deal. So, Ali, I'm answering questions. So, if maybe you should, I don't know. I'm just answering people's questions. So I'm trying to get right? So let's just pick another one, right, Ali? Let's just move on, right? Okay. I'm just trying, yeah, so what, yeah. But why don't you email me, Wayne at fxbootcamp.com. If you got real money, let's talk. All right, so somebody asked me about pound dollar. Okay, let's go through this. Resistance, resistance, off of a pivot. Great, great, great. Now you got to find your support. Great, great, great. Typically what I do before a reversal is I anticipate the consolidation. So I would still look for an up and a down before we make our next move. Or you let it break and then you take the same trade. Either way, you're going to get the same price. Oops, let me kill this. Let me back out. Okay. So the other way of playing this, of course, is like this. Let it break, let it come back, and then pull it down. Okay, makes sense? Bulls are just going to, basically play it this way until it breaks. Okay? If Bank of England is thinking about maybe someday possibly cutting interest rates, the pound would weaken. Okay? It's not the same as the US dollar. It's not a reserve currency. So just bear that in mind. Pound, dollar, pound, Aussie, pound, everything. This has hit the target. So like if you were trading this, your swing trade for the week was M3, M1, so you're done. See what I mean? The week before, what was the plan? M3, M1. Cool. So I would imagine you're probably thinking next week, M3, M1. I don't know. Right? So that means you need an up, 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 up to the central, down, down. Right? Is this what you're thinking? Just like this? Okay. Oh, be careful, Mr. B. I don't have forecasts. I just read charts. My opinion comes down to fundamentals, but when we're talking about something like, I'm not giving you my opinion, I'm interpreting. So I'll interpret the fundamentals to create an opinion, but technical analysis is not an opinion. Okay? It's not fusion, right? All right. So, anyways, that's that. So, watch the Bank of England. The more they talk about cutting interest rates, the weaker the pound will get. Yeah. Well, we got to have the language, right? I got to be a stickler because we're talking about everyone needs to adjust their thinking in so many different ways, right? So a forecast is a guess. I don't have a guess. I don't have a guess for gold, but I'll tell you what it says, right? So gold. This is what I said yesterday. If you're a bull, you're looking for something like this. And if you're a bear, you're looking for something like this. And that is still true today. Okay? So I'm either selling here, okay, or I'm buying here. Do I sell here now? No. Do I even sell high? No, I never said that. Right? Oh, did TBM, same here, Elliot. Oh, right on. So TBM, are you in the swing trading group? No, Heath, that did impact them, but we're talking about like 2 years later, maybe 3 years later, they folded, right? Live Trading Business TV says, can we do both, buy and sell? No, because what you just told me is you don't have a bias. I'll say it again for the 1 millionth time. If you don't have a bias, you're going to lose money, all of your money. You need to know what your bias is on gold. So one of the things we talked about yesterday is not even gold. We talked about dollar. Okay? You have to decide, is dollar going up or is dollar going down? And I've explained over the last 2 weeks in excruciating detail how to use things like the Fed funds rate or central banking reports or all these different things to just decide if the dollar is going to weaken or strengthen. If you can't figure that out, and I'm not saying, by the way, live trading business, I'm not saying you can't do it. What I'm saying, the you, meaning the us, the we, the invisible you, right? The whoever, the invisible we, the invisible them. If they can't make a decision on that, they will fail. Because it's a filter. You have to understand there's 1,000 things you can do every day. But with 1,000 options, you will never, ever, ever make the right one. Right? So, if you're a bull on dollar, you're a bear on gold. If you're a bear on dollar, you're a bull on gold. Great. So whatever that is, now you know if you're looking for support or if you're looking for resistance. So if you're looking at resistance, okay, let's look at this. You're a bear. We're here. Are we at resistance? Nope. Good. Don't do anything. Cool. And I covered that yesterday, which means you haven't done anything on this for the last 24 hours. I know, right? You see what I mean? So Cash says you can lose all your money if you do have a bias, but the bias is wrong. I disagree with that. Okay, Cash? I disagree with that. I would argue against that all day, every day. Now, I don't think you'll make as much money as if you are right. But I'm certain, even when your bias is wrong, you will be profitable. Okay? Think of it this way. The only way you can lose all your money is if there's a black swan event and the entire interbanking system blows up. And it's happened, by the way. I've seen it happen. Or you do not know how to trade. Under rules of engagement, you cannot have a disaster like that. It's impossible. Okay? So you can't say something like, oh, well, my bias is wrong and I lost all my money. No, you lost all your money because your trading sucks. That's the big thing. But then people get all upset. Wayne's insulting me. No, calm down. You got to be open and honest with yourself. Okay? Okay? You have to be open and honest with yourself. Right? I'm not sure how to read that, Cash. I apologize if I upset you. I'm trying to cut through layers of defense, and I'm trying to speak to you internally. So I don't know if you're upset. Okay? What needs to happen is if you know how to trade, right? You look at market conditions, and just by that you would say, these market conditions are not favorable to my bias. That's what technical analysis is. It's a measurement of market conditions, Cash. So if market conditions are not bullish, right? You see what I mean? If you're a bull, but market conditions are not bullish, that means that it's either sideways or down. then your technical analysis will prevent you from losing tons of money because you don't have the market to trade your bias. You see what I mean? That's what I mean. Now, some people will just trade. It's falling. They keep buying. Like, I've never once said that. I hate dollar cost averaging and all this other crap. So what I've been saying since even my very first public presentation as a currency trader, right? That was the very first Forex Trading Expo in Las Vegas. I'm a headline speaker at the very first Forex Expo. And from that day, I've been telling people, use technical analysis to confirm market conditions. And then use tactics to enter trades in the direction of that market. So if you're a bull, but the market's bearish, you don't really trade. And when you do trade, it's very mediocre. You know that. That's what the technical analysis tells you. You might buy at support, but you're like, yeah, this isn't really bullish yet. So maybe use half the lot size, or maybe you don't trade at all. But this bearish trade will turn bullish. And now you're like, this is it. This is what I'm looking for. In my book, I talk the mind's eye, because you've thought about it and you planned about it, so hard, it's so obvious, and now it turns right on your line, and now it's turning bullish, higher highs and higher lows. Buy, right? And so you might go 3, 4, 5, 6, 7, 8, 9 weeks with either no trades or piss poor trades or mediocre trades, some small losses, some mediocre medium wins, and at the end of all that period, not a lot happened. But like, lose your money? No, you don't lose your money. But then the market conditions turn favorable, and now you're making great money. You're getting lots of setups, you're buying lots of dips at support, you're getting all this stuff, and you're killing it, you're crushing it. But not because you're outsmarting the market, because you're trading with the market. It's the only thing I've been saying publicly since 2004. You see what I mean? The best thing about this is the prevention of disastrous losses. Okay? Okay? You understand? The whole point. Do you remember that my number one thing in the mantra? I have 3 things in my mantra. Right? Number 1, don't lose money. Okay? Am I back now? Well, my trading platform didn't lose internet. This one was, right? This one was YouTube now. I'm getting a YouTube error, but I didn't lose internet. So I don't know. So anyways, Cash, that I've said what I said. So I by no means mean any offense to you. You've been a member of this community for a very long time. You're good people, okay? So I'm not attacking you personally, but I am sharing my very definite opinion on the matter, okay? Okay, so this goes back to my book. I have it somewhere. Anyways, the mantra. Okay? The Fx Bootcamp Mantra. Does anyone know them? Yeah, Anthony says never lost, but some people did. So definitely the YouTube error has gone away now. So I don't know what was that about. But anyways. Yeah, okay, good. So we're right on. So we're good, Cash. Right? Yeah, a live trading business in general, I don't think he's talking about cash, but the general idea, like if you can't accept that you're a sucker and you suck, then you won't learn from your mistakes and stuff. Yeah, and actually, and once again, this sounds like I'm talking about my book, but I am talking about my book. How do I describe my process in the book, right? I said, when I first started trading, I sucked. I sucked as a trader. I had no instinct. I've never traded anything before. Never saw a chart before. Didn't know technical analysis, right? Didn't know fundamentals. I didn't have a background in fundamentals or nothing. Like, I had never owned anything except Apple Computer and Cisco systems. Okay? The only trades I ever made when I started Forex was I bought Apple at $6. I bought Cisco systems at, I don't know what it was, 14 or something, a long time ago. And then I bought a bottle of white wine and a bottle of red wine. Both of them have gone on to being the most amazing wine ever produced out of Napa. So I had a pretty good track record, right? So I'm pretty good at picking wine. I'm pretty good at picking stock, but I'd never seen a chart before. Didn't know fundamentals, didn't know nothing. So in my book, I said, when I started, I sucked. I absolutely sucked at trading. But because of my ridiculous, sickening work ethic, I focused very, very intently. And the key word there is intent. Okay? I focused very intently on educating myself. I spent like a month or 2 or 3. Let's say I spent 100 days on MACD. Stuff like that, right? Just MACD. Day in and day out, 8-10 hours a day, trying to figure out what MACD was, because there wasn't even books. Couldn't even buy a book to tell me what MACD was. So I just figured it out. Okay? So anyways, so I said in my book then, over time I sucked less. And of course, I've always said too, when you're making a lot of money, it's not because you're a genius, right? Do you guys remember the 3-second rule? Right? Yeah, something like that, Alex. Right? So I said there was a 3-second rule. Then I said, sit down, shut up, and get ready for the next trade. It's not that you're a genius or I'm a genius or anyone's a genius. You bought in a rising market. It's like, look, my boat went up because the tide came in. You're like, yeah, that doesn't make you a good sailor. Yeah, right on, Cash. I know that, Cash. That's why I treat you with respect. Okay. Yeah, guys, you'll have to read the book. I'm sorry, I don't have a copy. I haven't had a copy in years, right? But I remember something like, you'll jump up for joy, you'll kiss your cat, you'll hug your dog, the skies will open, and angels will weep. At the beautiful trade that you've done. You are a shining light in a world of darkness. Right? You are what other traders aspire to be. Now sit down, shut up, and get ready for the next trade. It's something like that. Honestly, because, yeah, I wrote it 15 years ago, but I would write it again. Okay? So it's not like we're never geniuses here, guys. And I've never said you should try. Like, I'm connecting with themes that go back 20 years, guys. Right? Don't outsmart the market. Use the tools you have to identify the market conditions. Will these conditions make you money? Think of it in other ways. You're like, when is it safe to walk in the house? Well, you look at it, you're like, well, the house is on fire. Well, maybe we should wait for the fire to go out, right? Like, same thing, like, I want to buy this market, but you're like, this thing is like falling like a ton of bricks. This is ridiculously bearish. What does that mean? At the bare minimum, you should seriously consider not trading at all. And do you have the patience and discipline? Remember, I've always said patience and discipline as well. Do you have the patience and discipline to not trade for the next 5 weeks? Fripple, you should apologize. That's really rude. At least in my culture. Okay. I do fine, thank you. All right. Yeah, so let's move on. Let's move on. I think we did oil. I think we did gold. I don't really do yen. Let's Kiwi, Swissy. A lot of these things are not really doing much of anything, right? So let's go down to that pound. We did pound dollar and pound yen, didn't we? We did pound dollar. Euro dollar, I guess. Okay. Remember, I gave you 2 or 3 breakout strategies. This was one of them. This worked. Now, do you remember, we also talked about this was the target. Look what happened when we hit the target, right? Someone asked, like, if you sell here, what's the target? I'm like, oh, that's easy. It's right here. And look what happened after that giant move. We hit our target, and it just stopped falling. Lovely. So what is it going to do now? You know, I don't know. But you could, if you were a bull, you would start looking for higher highs and higher lows and treat it like you're range bound. Or if you're a bear, really set this up for next week, right? Oh, okay. Yeah, I knew it was Fripple, but yeah, in here, that's private. It does. You know, that's like, you know, hi, Wayne, nice to meet you. How long is your penis? Like, oh, really? Yeah, it's just, yeah, it's not polite here. Okay. But I do spend more on school than the average American makes. Okay. So, I don't know. Put that in your hat and smoke it. And once again, I think I sound bitchy. I don't feel bitchy, but I know I sound bitchy. I'm really, 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 really tired. Sorry. All right. So we did a lot. Let's do something else. What should we be doing? Let's start over again, right? Tell me what you want me to cover. Let's just keep it tight on the text, okay? My personal library or Harvard's library? Harvard's the second largest library in the world. Thank you, Brinsley. I don't think I'll just try hard, that's all. Jean-Guy says, do you have excellent people skills? People think I'm an asshole. What are you talking about? The funny thing is, though, they're like, but the son of a gun's always right. That's the funniest thing. I think I'm that kind of person where, like, you love me or you hate me, but I'm always right, even when I'm wrong. Okay, yen, CAD yen, exotics. Exotics. I'm trying to think, like, I'm going through everything in my mind. I'm like, there's not a lot going on that hasn't already set up. So, like, when the swing trading group meets in a couple of hours, we're setting up next week. So, like, what's happening now and all that is almost like, In many cases, it's irrelevant, right? So someone said exotics. Well, we did Euro ZAR. All right, cool. But that's already in play, right? That's already in play. There was a second chance, which was mediocre, but I'm up here and making money and making more money, and that's cool. But nothing's really changed. So you know what my target is, right? Okay. Thank you, Anthony. I appreciate that. What's the target? I've missed a minimum of 27 messages during this webinar. No, it's not a stay in forever, really, but that's a strategic decision. But what is the tactical target? No, target's never a problem. Sanjay, that's cool. See, I can fix that. So the strategic target might be 9,000 pips, but what is it? I sold at the M3, guys. This is academic. Right? Sanjay says it's a problem. No, it's academic. It's ridiculously simple. You still have to make a decision whether you're going to see it through or beyond, but knowing the target is the basis of entering the trade. Right? Like we talked about, I think we talked about this yesterday. If you don't know the target, then how could you possibly know the entry? Because now you don't know, is this going to make you 250 pips or 25 pips? Like if you don't know the target, why do you make the shot? Like you got the ball, you start running with it, and you're like, dude, the net is over there. Kick it past the goalie. Like, what are you doing? You're in the parking lot. Like, dude, are you even in the same game? Like, you have to know the target. Right? Stop taking the ball off the field and running into the parking lot with the ball. You're ruining the game. Okay? Like, think of it. You have to know the target. So, guys, I know I'm your new captain of the team, so play hard. And everyone's like, what's the strategy, Captain? Just have fun. And remember, we're blessed to be players. No. We'd like to win the game. We'd like to win the tournament. Like, what's the strategy? All right, so all of these things, you know how to play defense. You know when to go hard on the offense. You know what the target is. You know where the other players are going to be in advance. Not reacting, but playing things in advance, right? So, you can't shoot if you don't know what the target is. But if you know the target, now you can take the shot when you're open. When conditions are favorable, right? If the target's heavily defended, you're not going to make it. So look, this is the entry, and I know that. Okay? This is the entry. Yeah. Good. But before I even looking for that, I have to know the target. So first of all, I know I'm bearish. So I'm on the bearish team. So if I'm on the bearish team and I know the basic rules of soccer, football, okay, then I'm like, okay, that means the net's behind me, my defenders are behind me, my goaltender's protecting that net. Cool. So this area here, if the ball is back there, I should build, between this line and the net, my own net, then I should be hardcore aggressively defensive. But if I can move it beyond this line and ideally past center field, I need to be hardcore aggressive to score. Now, where is the target? Right there. The far side of the field, just that goaltender and the net stands in the way of my greatness. So I know when to be ridiculously defensive, right? I know when to be aggressively offensive. I know what the target is, and then I have to look. Where do I need to be so that when my team gets the ball, they can pass it to me and I'm undefended? And then, of course, all the defenders are going to come to me, so I need 2 players on the other side of the field because now they're not being defended because the other team is chasing the ball. So when they get near me, I'll just pop it out to all these guys, and I have plan A and plan B. They'll put it in the net. Plan, strategy, tactics, thinking ahead, all this stuff, right? So I'm like, okay, cool. Here's the net. This is the net. So this is me picking it up in my defensive zone because bears are defending all of this. So this is where we can grab that. Okay? This is where we take it and we're driving it home this way. And now we're past center field, so we're aggressively offensive. Right? Right? And I know where we're going. Okay? What's wrong with the gap? Cash? Okay? You guys are getting the wrong things in the way. Okay? Yes, there's some gap risk of it filling, but this isn't a liquid currency. If that was euro dollar, that'd be much more concerning, but this isn't a liquid currency. You need to think of the bigger stuff first, right? You need, like, here's the real keys of success. You make a decision whether you're a bull or a bear on a currency. So, for example, I think the European economy sucks. Done. I like the South African swap. And I know that other institutional investors that need yield are flocking to exotic currencies unlike before because, you know, if you can make 5% on a pound bond, then why would you go with rand? But I think, isn't it the majority of OECD countries that have negative or zero yield? And the ones that do have yield have like hardly any yield. Like, so it forces yield hogs to take on more credit risk is really what it is. Okay? So you need to think the bigger things are more important than these little things. That little gap, people don't see that. Big institutional traders, they don't see that gap. They don't care. Okay? So you need to think about the big stuff, right? The big stuff. Play the game of soccer. Don't worry about your shoes. Don't worry. You got shoes? Good. Put them on. Let's go. Oh, but they're Adidas. If I only had Nike, I would score more. Right? So anyways, that's all. Don't worry about such things. So you do worry about them, but you trade them, right? So when you're here, did it turn green? No. The next candle, did it turn green? No. Next candle, did it turn green? No. Next candle, did it turn green? No. And even if it did, it would have just done this based on gap strategy, right? So all I did was I did this. I did it, 3-4 days early. Moved my stop to break even. And then it gapped down and made me tons of money. Cool. Why? Oh, because I sold high. At my line, at my price. I wrote it out. I drew the line. We talked about it a day or two early. I think I was short here and short here. Both of these broke even. And the next plan was here. So I caught that one, right? And that's the bigger thing. What about the gap? Okay. Okay. I'd rather you make decisions on the bigger pieces than the little things. Most of what I do is only confirmed by technical analysis, not created by technical analysis, right? Okay. If it gapped up, I would have got knocked out of break even. Done. Moved on to the next trade. I would have said, oh, yeah, too bad. Pro Trader says, I notice you always wait for the retest. Yeah, that's how I teach you how to trade. Yeah. We call that on a smaller time frame a double top. And so like this trade, I would have taken on a 5-minute chart. No, cash, nor did I say I did. I never said I knew any of this. I had planned to buy Eurozar for months and had been. I got lucky, bro. But not really, because I see the same information that Moody sees. So here's the plan. I created this plan on the first week of August. Okay? And I believe, if I remember correctly, I believe I sold it in here. I believe I sold it in here. I believe I sold it in here. And along the way, I got knocked out. Cool. Right? Collecting yield, not risking any pips. And so this wiped out. Did I know this ginormous thing would go up? No, just like I didn't know it would go down. Well, I planned on it going down, but did I know this was going to pop up? No. Did I know the velocity in which it would come back down? No, I didn't know any of that. All I know is I'm a bear, cash. That's it. That's the point I'm trying to make with whatever you are trading. You are a bull or a bear. Cash says, you didn't know what Moody's would say over the weekend. That's what I'm agreeing with you. I agree with you. I agree with you. Okay? I was short here. That's that. Why? It was my plan. I drew this for you guys early. I drew this for you guys early. I drew 17.000000. So on this entry, I actually had two plans. My plan A was sell at the M3. My plan B was sell off a kick off the 17. I never got the 17 because the plan A made too much money too quickly. Okay? So well, it's not luck, it helped. Okay? It helped. But you have to understand, there are massive, massive, massive fundamental reasons for this move, which I've been talking about for months. Okay? Months. So I'm just doing my job. I only sell it. So it's like one of these things where it makes sense what Moody said, but was anticipating what Moody said specifically part of my trade plan? No. Oh yeah, totally did, cash. Totally did. Totally did. But I'm not in control of these things, right? So my next move is, when do I move my stop, or when do I enter a next trade? But to me, it's dead to me now, like, right? It only took a few hours worth of work. I took the trade, removed the risk when we were down here, and then I'm done. And I'm not really concerned about it anymore. Okay? But you're right. I didn't say Moody's is going to downgrade or upgrade or something like that. No, I didn't. Nope. Never saw it coming. Nope. But I do understand the fundamentals at play here, and that makes me a bear. Notice that if anything, Moody's is confirming what I already know, but I didn't know they were going to come out and do it. I'm already doing it. I'm already making the trade that basically Moody's is doing. You see what I mean? Money is coming out of Europe that pays a negative swap. And these Europeans are throwing it into high yield currencies like lira and rand. And I'm in on the game too. Okay? You see what I mean? But, so it helped. Oh my God, it helped. But that Moody's thing, yeah, worked out. Yeah. There's luck, good and bad. But a longer term trader has almost no luck. When you're on smaller time frames, you could be a great trader, but you face getting unlucky a lot. Market conditions and volatility and a Trump tweet and all these things can ruin a perfect day. Okay? In this case, it was strategic. There's very little luck. It's almost like math to me. There's a solution. Now I can make a miscalculation somewhere, and I can say, oh, I didn't carry the one. Yeah. Oh, I'm supposed to flip the numerator to the denominator. Oh, I missed that step. Oh, my bad. But that's, to me, a mathematical equation. I know to sell that euro rand. I know to sell the euro lira. So anyways. Sanjay, why are you making webinars boring? Who's it, me or people asking questions? Let's do another one then. Let's end big. Yeah, Brinsley, my charts are open 24 hours a day. Okay. No, someone else said Sanjay. So Sanjay says the webinars are boring. But I'm not sure if he means I'm making it boring or if people's questions are making it boring. But yeah, so anyways, let's do another one. Say something about the Turkish lira. All right, so we'll go to here. And yeah, nothing's happened. But what's the plan for the week? So you should already know the plan for the week, right? What's the plan for the week, guys? Cool, guys. Thank you for your loyalty. Sell at M3. What's the target, Jose? Thank you, Luis. M1. Cool. Okay. So you're a seller at 640, 6.4. Your target is 6.3. Cool. But you knew that on Monday. Were you a bear on Monday?